Felix here. Do you know what it feels like to be down $340,000 on one stupid trading idea? Well, I got this message here. Just, crikey, wrong display. There it is. Hi, Felix. I'd like to humbly seek your advice if there's any way that I can rescue my failing Leaps core portfolio that is currently 75% down. Now, I know a lot of people are down 75% of their stocks, and I do write people messages on that every day, and I have tried to help you out with that. There's something you can possibly do if you have a stock portfolio that's 75% down. If you have a call portfolio that's 75% down, there is no silver bullet at all. And there is a real lesson in here, I think, for everybody, whether you are trading options or not, about how to invest going forward. He posted a link to this. I'm not gonna put it out publicly because I didn't ask his permission, but he wouldn't mind me putting this out because he's written a blog post on it. So should I be selling all of the positions to recoup back the 25% capital? The $300,000+ loss is really massive, and I'm still hoping that the market would still rally by year end so I can have a lower loss. Not sure if you could help me on this. Thanks for your time in reading through it. And I did read through it. And he's made 958 options contracts, and they were all calls, leap option calls. Now, what's a leap? A leap is a call option that is at least 9 months out. So you're saying, I know that this stock is going to go above a certain price in 9 months or 1 year or 2 years. How you know that? I have absolutely no idea. And he lists loads of them, and he did loads of them on like the same stocks, right? Facebook. He doubled down on them every single month, which is again the worst thing to do. It's applying sort of DCA stock investing to options trading, which is just horrible. I asked my head coach, who's been teaching university. He's been teaching options trading at university for the last 10 years plus. And this is his response. He said, that's like playing Russian roulette with options. And it's precisely what it is. And lots of people do that. Do you remember I had Stockmo on the channel and I asked him, what do you think about options? Do you ever do that? Because he used to teach people investing, right, before he came onto YouTube. And he said, well, I haven't had much luck with leaps. And I was like, no disrespect to Mo and his cats intended, but it's just that's not what options are about. Now, even if you're not doing options, so there's a huge lesson in this for us. So this is his total loss, $364,000, $424, 75%, horrible. Is he going to be able to recover this? No, absolutely not. He's been trading leaps in the worst way possible. Now, and the problem is that lots of websites, lots of people out there, and that's really what I want to get across here, is you need to be really careful who you take guidance from. Look, this is a website, The Balance, relatively reputable. They say, using leaps with an expiration of up to 3 years can be an alternative to buying stocks outright. Exactly how is it an alternative? You are betting on a stock in 3 years to have a certain share price. Now, if you're in a bull market and everything goes up like that, and you bought your leaps here and the market's still going up in 2 years' time, of course, you're a genius. No, you're not. You're just bloody lucky. They can result in huge returns, but they can be risky. No, it's the other way around. They are risky, and they rarely result in huge returns. And you'll have to roll the dice just right. All right, explain this to me. Take 2 dice and roll them and say, I will get 6 and 6. How often does that happen? Well, there's a probability behind that, and it's mightily small. It's not about how you roll it, how you blow on it, or how beautiful the girl is in your arm. None of that matters. That's superstition, and none of that belongs in your trading portfolio. The position makes sense if you believe the stock will be worth much more. This is not a religion. This is not a faith-based activity. This is investing your hard-earned money so you get the maximum return with the least amount of risk over time. That's all investing is. It's not a belief system. So these people who use words like belief and this kind of nonsense, you have to, unfortunately, come to your own conclusions. You have to understand something by reading more than one source. Look at the Options Playbook, again, a relatively reputable website. They say, here is a method of using calls that might work for the beginning options trader. buying long-term calls or leaps. It's never going to work for the beginning options trader or for any options trader. No successful options trader has ever gone out there and said, you know what I'm going to do today? I'm going to say that this stock in 3 years' time will trade at $105, and I know exactly why. Because you can't predict what the stock market's going to do in 3 weeks at the moment. How can you possibly predict what it's going to do in 152 days or whatever it is? 56 days, weeks rather. And no one's got any idea. And then they say, as a general rule of thumb, consider buying a call that won't expire for at least a year or more. So you've got bugger all visibility. That makes the strategy a fine one for the longer term investor. You are not an investor. You are a gambler, a complete gambler. Russian roulette gives you better odds than this. After all, we're treating this strategy as an investment, not pure speculation. And I'm sorry, you are lying to your readers. It is the worst kind of speculation ever. Now, why is it so terrible? Because what happens when you buy a leap option is you are paying a premium. So say you pay $100 for some odds of, getting whatever, 5,000 in 3 years, which is never going to happen. That'll have maybe a 2% probability or something like that. 98% of the time, you're just going to lose all of your $100. So if you make a significant portfolio, it's going to really cost you. And as time expires, what happens to your money? It goes down. That's the way these things are set up. And people don't understand it. These articles don't mention implied volatility or any of the core things that actually matter to options. So it's rookies teaching rookies, taking advantage of them, guiding them in the wrong direction. And it's just horrible. Unfortunately, I had to write to this lovely gentleman, who's very, very kind, that there really is nothing he can do other than close his positions out, take the losses and recover what is left of his capital and start afresh with a strategy that actually works. And unfortunately, that's very much the same that's happened to people who are betting and gambling. People are still betting and gambling on also all sorts of stocks that sell popcorn and whatnot that don't make any money. And yeah, you can get lucky with timing, but you're just lucky. Go and buy a lottery ticket, seriously. It's at least your risk is defined. With these things, it's pretty unpleasant. And I genuinely wish that we achieve this goal of ours, that we make 100,000 families wealthy to the extent that they have intergenerational wealth. They never have to worry about money again. And it's this kind of stuff here that really kills people. It puts them off investing. And the worst thing is that they then look for the next idiotic scheme to make up the loss faster, because now they don't want to admit it to themselves, and that's the hard part for us. So it makes me very sad, to be quite honest with you. I find it quite difficult to reply people like that because I want to help them. I really do. And if somebody's got a portfolio that's a bit too techy or a bit of this, a bit of that, we can usually do something about that. At least give them some tools to make themselves better. But with this pure gambling, or I get a lot of people on the calls, they say, hey, what if I buy this 3 times leveraged ETF on something? Leverage. Let me show you what leverage does. It's almost as bad as what this is. Say you buy a stock at $100. The stock goes down 10%. What happens? You go to $90, right? That's normally what happens to us. What happens if you're leveraged? Well, it's leveraged. So say it's 3x leveraged. Let's just say 3x leveraged. So your $100 goes to $70. Okay. Now, the next step, the stock goes up again 10%. So I've taken my 90 and I'm now going to go back up to $99. So I'm $1 down. I can live with that. What about you with your leveraged spot portfolio? Well, you go up 10%. Where do you go? Well, you go 3x up, you go to $91. You're still missing 9%. I'm missing only 1%. You see what the problem is with this? That severe ups and downs kill you. So really, there is no shortcut to being a good investor. You actually have to learn a skill. And that can simply be identifying what great stocks look like. We've got tools for that, lots of them. One of them is our stock tracker dashboard. There are tons of free resources on the website, free courses and everything else. So check it out. Actually put your portfolio in here, hit the update button, and understand what the margins are, what you're investing in, what's the ROE that you're investing in, what's the long-term earnings per share. That's really the number that matters almost the most. It's like, how is your profit going up as a shareholder for each share that you hold, right? And if it's negative, well, it's a bit of a concerning sign, isn't it? If it's 20%, 21%, like Estee Lauder, for example, you're thinking, well, there seems to be some money in lipstick, right? So it's not about investing in the sexiest thing. It's investing about something that actually is going to make you money. Now, can you still invest in growth? Yeah, sure. But make it a percentage of your portfolio. Don't make it the whole thing. And stop this gambling malarkey. You can get your hands on this spreadsheet at felixfriends.org/Patreon. It's like 20 cents a day or something. Join us for the year. You get an extra month off. And seriously, go to the website. There's a whole free section on free courses and everything else. Here's a free resources section here at the top. That will genuinely give you information that I have gathered over the last 20 years, having worked in the industry as a banker and having invested for the last 20 years. This isn't mad stuff. This isn't a get-rich-quick scheme. And I know people say to me, well, how can your portfolio be up that much, right? People doubt it because they say, I'm up 136% on the options portfolio. People think, therefore, that I'm gambling. I'm doing the very opposite. I'm running a casino. And that's what I teach my students, is to run the casino, not be the guy who chucks his money on red or black or a number or something on the roulette table. And that's unfortunately what a lot of the financial industry is driving us retail investors into. And I was a horrible stock investor when I started. I didn't know anything about it, and I was totally led astray. It's your responsibility in life to become really good at this. And if you become really good at this, you're going to have a fabulous life. Your children will have an incredible life. Your grandchildren will be, thanking you, building you statues, if that's what you're after. So learn how to do this. You can give us a call at felixfriends.org/coaching and see what we're all about, and we'll gladly walk you through how I can get you there and how I can make you achieve intergenerational wealth without these idiotic so-called shortcuts that just put that chap back $340,000. Think about that. That's horrible, right? How many years did you work for that? It's really a horrible thing to do. So it's better to start slower and really understand what's going on. Be confident in it, practice it. You can do paper trading. Yes, take your theory, paper trade it. And if you've started investing in the bull market or in the bear market now, know that it'll change, it'll turn around. It won't always be a bear market. It won't always be a bull market. The only inevitable thing is that every bear market is followed by a bull market and vice versa. So you need to not listen to the people who always shout everything to the moon, because that is only going to work half the time. Your strategy needs to work all the time. So apologies for this long rant, but sometimes I get these messages and they kind of get to me, and I think there might be some value in sharing it. If you think that there is, I'd appreciate it if you shared the video, hit the like button, show the algorithm that more people should watch this, more people should learn for this, and more people should stop gambling and start making money. And there's so much fun in investing if you know what you're doing and if you are certain of your outcomes to the extent that we can be certain. So like an 80-90% probability. And if you have our risk management down properly, you are no longer scared of your investments. You enjoy it, you look forward to it, and you have this incentive to put more money into the market week after week after week. So there we are. That's me, rant done. Thanks very much for watching.